If you were to look at, I think we just entered into a definitive agreement with Goldman Sachs for their domestic and mutual fund business. Overall, the mutual fund business for Goldman is about 7,200 crores, 12 schemes, which has been valued at 37.5 million, which is about roughly 250 crores. This entire funding is basically being done out of is an entire cash deal, and the entire funding is being done out of the internal accruals. I think from our perspective, what it gets to the table for Reliance, Goldman Sachs had built up an excellent franchise over the years, and if you were to go back to the history when they acquired Benchmark, I think Benchmark was one of the pioneers in setting up the ETF business in India. Reliance has, I think we have a great track record for active schemes, and from a long-term point of view, if you were to see, we become now the only asset management company in India which has a long-term track record for active funds, which is whether it's a growth and vision, which have a 20-year fund, and also the schemes of Goldman, which was originally Benchmark, which have almost a 15-year track record. In long term, we believe ETF business will become big the way it has become big globally, and this acquisition is of strategic importance to us because it complements our product suite.
Sikka, if I could ask you a couple of things. A, after this acquisition, what would be the cash position on the books of Reliance Capital Asset Management? And B, as you're rightly saying, ETF is where the Goldman Sachs strengths lie. So in that sense, going forward in your product portfolio, would ETF be the foremost when it comes to the whole product portfolio for you?
So let me answer the second question first. As an asset management company, we manage 2,50,000 crores. Majority of our money is active till now. So it's not a question of whether ETFs will become the main product. I think we as an asset management company offer all type of products, whether it's to do with active, passive, across asset classes. So we clearly see a big opportunity. At this point of time, this ETF business is 7,000 crores. We also have some ETFs about 2,000 crores. All put together, we believe this is a great opportunity to grow. And that's one of the reasons for this investment.
On the cash balance, if you could throw some light.
We have a net worth. Reliance Mutual Fund is one of the most profitable asset management companies. We have a net worth of about in excess of 1,400 crores, and this entire funding, like I mentioned, is happening from internal accruals. And even post this funding, I think by the end of the year, I think we should be roughly around the same number.
And when it comes to growth, how do you look of FY16 panning out for you after this acquisition? Also, you have got some big ticket size into your AUM, particularly from the coal Provident Fund, where of the 75,000 crores, you are also one of the 3 players who have been selected. So that would be a huge chunk coming in. So how do you look at the growth and AUM at the end of fiscal FY16?
Yeah, I think we are very happy and thankful to the government for having trust in us. Today we are managing both EPFO and coal miners. And if you were to see also, I think the fact that we have got Nippon Life as a shareholder, we are also managing a lot of offshore funds. We launched funds in Japan, which are more than $1 billion now. And I think we have plans to launch a couple of more international products with them. So the way we see is, I think clearly, from a long-term point of view, post this money coming in from coal miners, a lot of offshore funds, I think we clearly see ourselves crossing nearly 3 lakh crores very soon. From a profitability point of view, as far as this acquisition is concerned, we believe, I think from a long-term point of view, it will be very positive for us because we see ETF business growing. While today the volume is very small, today we are talking of 8 to 10,000 crores, but we clearly see this becoming really big in times to come.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.